Live from the Invest Philippines Summit in Manila, this is Insight with Haslinda Amin. We're diving into the risks and opportunities shaping one of the fastest growing economies in Southeast Asia. That's as the Iran war raises global energy prices and tangles supply chains, deepening economic pressures across the region. The Philippines is an economy heavily dependent on imported fuel and remittances, and policymakers are being forced to reconsider the path forward as they confront double-digit pulp price increases, rising power costs, and a weakening peso. More on that from Bloomberg's Avril Hong.
The war in Iran may be thousands of miles away, but its economic shockwaves are hitting Filipino households particularly hard. The country, which imports nearly all of its oil requirements, has seen double-digit fuel price hikes in recent weeks and expects power costs to rise by 16% next month. Government offices have shifted to a 4-day work week, while agencies have been ordered to curb their power and fuel consumption by up to 20%. The country's energy secretary says they're looking to review a nearly 30-year-old law that liberalized the local oil industry.
I think it's about time that we revisit that, learning from what's happening now in previous years also when there were oil problems in the other side of the world.
The energy secretary says local oil companies are now looking at sourcing supply from countries beyond the Middle East.
It's not about the supply, it's about the price. If you do buy one, you have to find a ship that's willing to sail to your country.
The Philippine Central Bank governor has warned of more monetary policy tightening as global oil prices hover around $100 a barrel. Last month, policymakers cut rates to their lowest level in more than 3 years. But they are wary of further upside risks to inflation, which has already accelerated to its fastest pace in more than a year.
It's possible that at $100 a barrel, then we will begin to breach what we call our tolerance range. We breach 4%. Then we have to do something with monetary policy.
The Philippine peso has also fallen to a fresh record low, nearing 60 against the dollar as the conflict persists. The war could also have a significant impact on the country's labor sector. Some 2.4 million Filipinos live and work in the Middle East, and thousands have already asked the government's help for repatriation.
So as the Philippines navigates this challenging situation, we'll speak to a range of stakeholders over the next 2 hours, including Finance Secretary Frederick, PSC President and CEO Ramon Monzon, and SM Investments Vice Chairperson Teresita Sy-Coson. Now, the Philippine Central Bank says it's intervened to support the peso after it threatened to hit the psychological level of 60 per dollar. This chart shows Brent crude priced in the Philippine currency also near a record, underscoring the magnified impact of a strong dollar and rising oil prices on import-dependent economies. Let's bring in Manila Bureau Chief Manolo Sarapio. And Manolo, of course, we saw the BSP intervening to support the currency, but the pain is not over. It could still get to 60 anytime soon.
Yes, Haslinda. The pressure is still on because the peso's current weakness really speaks to its vulnerability to rising energy costs. Obviously, the Philippines imports nearly all of its oil requirements, so you have the combination of the strong dollar plus the challenges to the Philippine economy from the rising energy costs. The Philippines, obviously, the government is doing what it can. It's trying to source oil from alternative suppliers. It, in fact, is in touch with Russian oil suppliers for alternative crude. And we just heard the finance secretary speak at the forum this morning that the government is trying to source 2 million barrels of oil just so that we won't experience that fuel shortage. Domestic fuel prices have about doubled since before the war in Iran broke out. And we don't see any pressure easing as of yet.
Will we see further pressure on the Philippine currency?
Yes, I think we're not. I don't think we can say that we're out of the woods yet in terms of the peso. 60 level has always been a key threshold that's been looked at by policymakers, by even the president himself has said that he does not want the peso to cross that level or hit that level. And I think that's what the central bank governor or the central bank did yesterday. The central bank governor was telling us that some intervention would help push the peso back down below 60. But I'm not sure how long they can afford to do that, intervene in the market.
Especially since oil prices, Brent crude, still hovering at $100 a barrel. Manila Bureau Chief Manolo Serapio, thank you so much for that. Let's get to our first guest. And joining us exclusively is Philippine Finance Secretary Frederick Go. Secretary Go, thank you so much for joining us. We're talking about the Philippine peso has been under tremendous pressure. How concerned are you about the weakness in the currency?
Well, thank you for this, Haslinda. In the last policy meeting, the Monetary Board reduced the policy rate by 25 basis points. If the price of oil continues to persist at elevated levels, it is most likely that the Monetary Board will consider tightening in the next meeting.
Is there a need for the BSP to be more aggressive in supporting the currency?
I think the BSP has a policy of neither supporting, of not directly supporting the currency. What they have is a policy to intervene in the markets when the movements are too abrupt or too sharp. But if the movements are gradual, they have a policy of not intervening.
So have the movements been abrupt or gradual? What's your take on that?
I think in the last few days it's probably been more abrupt because of the external shock of the Iran war.
Is there a need perhaps that the BSP needs to do an off-cycle tightening? Because we know the next meeting is at the end of April. That is in 6 to 8 weeks from now, which is a very long time. And we've seen oil prices elevated at $100 a barrel for the last 3 days.
I'd rather leave that to the Central Bank of the Philippines to consider doing an off-cycle move.
At what Philippine peso level would you be most concerned about? Especially given that oil prices are priced in dollar.
I think, again, I'd like to be consistent with the policy of the Bangko Sentral, which is as long as the movements are smooth and not abrupt, it should be okay. I think what we're really concerned about are abrupt and very sharp movements.
Some in the market suggest that the peso could breach 60 as soon as today. If it does breach 60, is that an abrupt movement? Would that prompt a pivot in the BSP?
I think the definition of abrupt is not a number. It's not 59 or is it 60. It is how quickly that rise will be.
So, as it stands right now, from a finance secretary perspective, you're not too concerned about the weakness in the currency?
I'm not too concerned, yes.
What would cause you to worry?
The weakness in the currency also has its benefits. It also supports our export sectors. For example, our largest export are the export of, for example, semiconductors and electronics industry. That's $115 billion. That grew by 9% last year. Our second largest export industry is the BPO industry. That's $40 billion. That grew 5.3% last year. And our third strongest dollar remitter would be the remittances from overseas Filipinos. That's about $36 billion. That grew 3.3% last year. And on top of that, we have two other legs that we are hoping to build. That would be tourism and the mining sector. So we have other beneficiaries as well if the peso, in your words, devalues slowly. As long as the movements are not abrupt, we should be okay.
So is your growth projection intact? You've talked about a potential recovery in the first quarter. Is that going to happen?
Well, obviously this external shock, this oil shock will affect the GDP growth. As you know, the most important variable in all of this is the price of oil and the duration of this elevated price. If it is short term, meaning if it were end to end tomorrow, perhaps the effect on GDP would be less than 10 basis points, maybe just 0.1%. But if it persists, say, for 6 months, then it will have a more pronounced effect on our GDP growth.
As it stands now, people say that the 400 million barrels of oil through the petroleum reserves would take about 6 months for it to be filtered through to the world. Chances are oil prices will remain elevated. If oil prices remain at $90 to $100 a barrel, how would that impinge your growth projection?
Okay, we're looking at several interventions at the government level. The first one is we have gone to Congress to seek authority for the president to reduce excise taxes on fuels if the price of Dubai crude, which is our basis, exceeds $80 a barrel for a 30-day period. Then the Budget Committee can recommend to the president a reduction or suspension of the excise taxes on fuel. The second request we have in the legislature is to pass a new biofuels act that relaxes the limitations or the abilities of the domestic oil companies to procure additives to our fuel, particularly palm oil, methyl ester, and ethanol. We blend the cocoa methyl ester in our diesel and we blend ethanol in our gasoline. And if the price of these additives are 5% more than the cost of pure fuel, we're asking for permission to source them from the world, where you can acquire these additives at a much reduced price. So that will also help bring down the cost of fuel at the pump. The third thing that we're looking at is the Philippine National Oil Company, EC, a subsidiary of PNOC, is looking at acquiring 2 million barrels of oil from the world. And this is a precautionary measure that will allow us to increase our buffer stock in the Philippines. So as we speak, the PNOC-EC is securing bids from all over the world to procure these 2 million barrels. Yeah.
Secretary Go, just help me understand, at what oil price would you have to revise your growth projection?
Over 80 will already have an effect. Over 80 and over a month, you already have to adjust slightly. So right now, where it's close to 100 for Dubai crude, and persisting for 16 days, it will have an effect already.
You talked earlier about how remittances will help the country grow. We have millions of Filipinos working in the Middle East, in Dubai, in United Arab Emirates, Saudi Arabia. They send home 600 million pesos per year. That accounts to somewhere between 8 to 10% of GDP. If that is at risk, how might that reshape your thinking on growth?
Let me assure you of a couple of things when it comes to that number that you gave us. So, based on our statistics, about 85% of them remain gainfully employed in the Middle East. They continue to receive their salaries and they continue to remit to the Philippines. So, we have a very small portion that is at risk at this moment. That would, of course, be those who actually reside in Iran or reside in Israel. But the large population in Israel, over 90%, remain gainfully employed, and they wish to remain there. So there's only a small percentage who wish to return home to the Philippines. So I would say that the risk of that amount that you mentioned is probably overstated.
You also talked earlier about how there is a move towards removing the fuel taxes for a certain period of time. Might that impact, your spending plans on the back of that?
Yeah, very good question. The idea there is to reduce the excise taxes on fuel, but on the other hand, we also collect value-added tax on fuel importations. So it's a double. It's a double movement, right? One can go down, the other one will go up, because as oil prices continue to go up, the VAT that we collect will also go up. So we have a balancing factor.
So your budget deficit remains intact. I mean, the projection is for 5.3% for 2026. Any risks you might miss that?
Of course, there's always risk that we might miss that. But I believe that the fiscal discipline that the government is undertaking should help mitigate that. For example, the President has called on all government offices to save on energy costs, postpone unnecessary travel, and to also look at remote work. The Department of Finance, for example, and all the attached agencies under the Department of Finance will continue to serve the public 5 days a week, but we will work 4 days on site, 1 day remote work. And I think most importantly, we're asking now the agencies to delay non-urgent programs and capital outlays.
Where are you in terms of your projection for inflation? The people are feeling the pinch because there is immediate direct implications on food, on energy prices, and hence you've gone, to a 4-day work week. Where are you on your thoughts on inflation?
Well, I think that's a reality already. We have put our band on inflation at 2 to 4%. We finished February, the first 2 months of the year, at 2.4%. So we have some headroom to still remain within our band. But of course, definitely we're going to see inflation numbers creep up as long as the war persists.
So do you think that the BSP would be in a very difficult position managing inflation and growth at the same time?
I think the BSP's main mandate is to manage inflation. I think that's like the top mandate. So
it has been helping growth at the same time too.
Yes. In the easing, when we started the easing cycle, but we also signaled in the last policy meeting that we are nearing the end or very near the end of the easing cycle. So we did communicate that.
In terms of alternative energy and also energy security, how do you ensure that there isn't an energy crisis in the country? Because right now businesses are concerned that perhaps you'll run out of fuel by May.
Yeah. That's a very valid concern, which is why last Sunday, I, together with the Secretary of Energy, met with the 16 oil companies in the Philippines. We were able to address most of their issues. We also asked them to help us source the 2 million barrels of oil that the government will step in to add to our buffer stock. They also had another ask, a very interesting ask that I thought was a novel suggestion from them. They were looking at relaxing some of our product standards. Apparently, if we relax our product standards, we will achieve two things. We will be able to source cheaper fuel. And secondly, we will now have more sources of fuel because the higher product standards we have for fuels in the Philippines limit the number of countries we can buy oil from. For example, most of our oil we buy from Korea because Korea can meet those product standards. So we buy from Korea, Japan, Singapore, and China. By relaxing those product standards in this emergency situation, we can now suddenly open our sources of fuels to probably 3 times that or 4 times that. Much more countries can sell us the other product standard fuel.
So is it a suggestion that you will be adopting?
We're looking at it very positively, but of course the Department of Energy is studying it.
And in terms of renewable energy, where are you with that for the longer term?
Oh, we're absolutely supporting that. In my stint as a special assistant to the President for investments, energy was like 70% of our registered investments in our country, and all of them were in the clean energy field. So we're talking about onshore wind, offshore wind, solar power, and battery storage system for these renewable energy sources.
Secretary Go, I just want to follow up as well on the markets. We've seen an exodus of foreign money from the Philippines getting sold off along with other emerging markets. What mitigating factors and measures can be adopted to ensure that the market is more resilient than it is today?
Yeah, I think like in my discussion with the IMF managing director just last week, I think we really just have to keep focusing on our main pillars of strengthening the governance framework, strengthening the government institutions with fiscal discipline and smart spending. And of course, maintaining that government should remain an enabler of businesses to thrive. We need to create an environment that is conducive for private sector investments into the country. That's our main pillars to keep strengthening the economy.
Did the IMF suggest any steps that the Philippines should adopt to build on growth?
I think we are very much aligned. They did make suggestions, but all of them are
What were some of the
practices for already.
suggestions?
The ones I mentioned, improving the governance framework and strengthening government institutions.
And how soon do you think those measures can be adopted?
We're already
be more
adopting
resilient?
them. We're already adopting them.
But the market's not buying.
Well, I think we have to do our job. Like, for example, bring down the fiscal deficit from 5.6% to 5.3%. So we're taking those steps to do that. And our credit ratings of the country are pretty good. We are rated BBB+ by Moody's, Fitch, and S&P. And the Japanese rating agencies have us at A-. So I think the credit rating agencies are recognizing the fiscal measures that we have put in place.
There were suggestions that you'll get to A by the other credit agencies. Perhaps the Iran situation would delay that. Is that your own reading?
Well, of course, it's another obstacle, another challenge that we have to hurdle to be able to achieve our road to A.
Are you confident it might happen this year, next year? Is there visibility on that?
Let's just say that I'll continue to pursue that road to A.
In the bond market, of course, investors have been demanding a higher rate for investment. In fact, for two auctions already, you've rejected the bids. Would you continue to reject the bids, or might you at some point accommodate what investors are looking for?
We will accommodate. We, of course, just have to, it's a balancing act, right? We just have to reject if the bids are too aggressive. But let me put it this way. The country today will have to borrow about 2.6 trillion pesos. 1 trillion pesos to retire maturing debt and 1.6 trillion pesos to cover the budget deficit. And out of the 2.6 trillion, 2 trillion of that will be raised domestically. So we're borrowing in peso. That's about, say, 77% of the debt. The other 23% will be through foreign denominated loans, no? And about half of that will be covered by the multilaterals like ADB, World Bank, AIB, and of course the bilaterals with countries like France, Japan, and Korea. So the external debt that we will have is actually a very small portion of our total debt targets this year.
So is there a need for you to tap the debt market even more, given the current situation, given the need to help the Filipinos amid such a hard time?
Again, it's a balancing act. We're also trying to see where government can save on the expenditure side. The President has called on the government offices to try to delay unnecessary programs and to save on expenditure. So if they're able to achieve that, he called for a 10 to 20% reduction in energy costs in government offices, for example. So if we're able to achieve that, then maybe there may be no need to increase our debt levels.
Which projects in particular may get delayed if you need to spend more money supporting Filipinos?
I'd rather leave that to the various agencies to determine which projects of theirs may be delayed. I think a lot of the projects have their own what we call economic rate of return. So I would imagine that if you had some projects with an economic rate of return of 15%, you'd probably pursue them. And if the economic rate of return was only, say, 11% or 10%, perhaps those could be delayed. I've always been espousing that the government should spend on programs and capital outlays that produce the highest multiplier effect on the economy and promotes jobs for the people.
Secretary Go, people talk a lot about the potential of the Philippines. When do you see the country growing at 7-8%, which the President has said is possible?
I think every time we're about to hit our stride, every time we've put in so many programs to encourage investments. We have the Create More Act, the Public-Private Partnership Act, the Right-of-Way Act, the Mining Fiscal Regime Act, the Land Lease Act. We've put in so much foundation to attract all these investments, and every time we're about to hit our stride, there's an external shock that happens. I'm hopeful that I think shocks, for one, is now part of normal life. We cannot say that there will be no shocks. There will always be shocks. But there's a lot of green shoots in what we're doing. For example, the registered investments in our investment promotion agencies totaled 1.9 trillion pesos in 2024 and in 2025, 2 years in a row with record levels. Also, we have a lot of investors that are already coming in. If I may, when we passed the Create More Act, we had this incentive for investors that invest over $1 billion or 50 billion pesos. Samsung is putting up a factory, taking advantage of the Create More Act, and countless of other stakeholders who are coming to the Philippines.
Secretary Go, thanks so much for your time. Great to have you on the show. Philippine Finance Secretary Frederick Go there. We'll have more from the Invest PH 2026 conference here in Manila. Catch our exclusive interviews with the Philippine Stock Exchange CEO, Ramon Monzon, as well as SM Investments, Teresita Sy-Coson later in the show. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Invest Philippines Summit here in Manila. We're awaiting the policy decision from the Australian Central Bank. It would be coming any moment now. In the meantime, let's do a check on how Aussie assets are doing. Of course, the expectations are that we might see a rate hike to 4.1%. That's what most economists are expecting, from 3.85. Currently in focus, of course, the RBA communication with 72 basis points of tightening already priced in. Now, Australian inflation remains elevated even before the surge in energy prices. And of course, the RBA raising its cash rate target as expected by 25 basis points to 4.1%, in line pretty much with a lot of the economists' expectations. The RBA board voted 5-4 for that rate hike. Inflation picked up materially in the second half of 2025, according to the RBA. It says that the financial conditions have tightened a little this year. Now, today's policy decision was made by the majority. 5 members voted to increase the cash rate target by 25 basis points to 4.1%. 4 members voted to leave the rate unchanged at 3.85%. Again, the RBA raising its cash rate target by 25 basis points to 4.1%. Let's bring in Bloomberg's Paul Allen in Sydney. And Paul, no surprise there. Inflation is front and center. Well, we'll get to Paul just slightly later. Let's get reaction with Wayne Gordon, MD of Commodities and FX at UBS Global Wealth Management. Wayne, no surprise, right?
No surprise here, Haslinda. Look, great to see you as always. In the end, the RBA are facing 2 threats here. Number one is that inflation clearly is being a little bit higher than they would have expected, and it's made them a little bit uncomfortable about the fact that they've had to push out their forecast for returning to within the target by an extra 6 to 12 months. So clearly this hike today is a function of the activity that they started back in February. But having said that, the second risk they face now is around the Iran war and the impact that higher petrol prices can have on the Australian consumer, who is also now facing higher interest costs. So I expected today that if they did hike, it would be very much a dovish hike. It would be a hike where they come through with what they had been discussing previously, but now begin to talk about the risks to global growth and the impact that could have on the Aussie economy, and they will be very much guided by the data from here on. The currency reaction is pretty much reflecting that view.
And where do you expect the Aussie to go from here? I mean, we talk about that Aussie dollar now down after that vote of 5-4. Where do you see that currency headed now, Wayne?
Look, I think that in the end, this comes down to the nature of the Iran war from here, how long the Strait of Hormuz is closed for, and the impact that will have on energy prices looking forward over the next 3 to 6 months. Obviously, you know, these risks very much in the short term could lead to short-term spikes in oil prices, remembering that Australia is a net energy exporter, but it does import most of its domestic gasoline requirements, etc. So the impact on consumers here can be disproportionate to the impact that we see flow through to people like the energy sector in Australia, as well as other parts of that sector. So I think that the Aussie dollar over a 12-month basis, if we see some pause or some off-ramps being taken by either parties in this war, I think in that context global growth can resume. The expectations for stronger growth through the back end of the year can materialise, and that will see further upward pressure on the Aussie dollar. We targeted, prior to this crisis, we had targeted somewhere between the 73 to 75 cent mark against the US dollar. But having said that, this current situation where it seems to continue to get extended, it makes it very difficult in the short term to really see how many of these cyclical assets, including the Aussie dollar, will respond. As I say, a lot of this will be predicated on the next couple of weeks and the impact that we see flowing through to the oil market and these other risk-on assets like the Aussie dollar.
Right. Wayne, pretty obvious that central banks are keeping a very close eye on oil prices. You know, Brent crude elevated at more than $100 per barrel for 3 days in a row already. Yet, when you take a look at the equity market, little has been lost, and, you know, there's been pretty much resilience there. Volatility also pretty contained. Is there a lot of complacency in the markets right now?
Yes, I think there is, Haslinda, and I think that at the moment the equity market is operating on hope, whereas the crude oil market is operating within the constraints that it's seeing. So we have not yet seen, in our view, we have not seen yet the peak of oil prices. Clearly, as I said, the next 2 weeks is extremely vital. So we have a base case of oil prices hovering around the $90 a barrel by the time we get to the end of June. However, that is predicated on, over the next 2 weeks or so, the Strait of Hormuz being reopened and oil flows start to look a little bit more meaningful and a little bit more sustainable. Yes, we are seeing some oil exiting the Strait, but that is very constrained compared to we were a couple of weeks ago. Our estimates are that currently around 10 million barrels per day of oil has been disrupted due to the current conflict in the Middle East. Now, as I say, if that is corrected, if we start to see oil flowing more freely, prices can come back down to that $90 a barrel towards the end of the second quarter, because some of these disruptions will be persistent due to shut-ins, due to infrastructure being damaged, etc. But generally speaking, if oil starts to flow through the Strait, prices will start to gravitate or at least stabilise around this $90 to $100.
$90 a barrel is still much higher than where we started the year. Would that shape or, you know, prompt you to rethink your strategy in the markets?
Look, I think, again, I think this comes down to the duration of this particular shock. Clearly, if it persists beyond these next few weeks, this is going to have a more material impact on earnings overall, and particularly as it impacts supply chains as well. We're not just talking about crude oil here, we're talking about petrochemicals, we're talking about fertilisers, we're talking about plastics, apparel, these sort of items which are really impacted by supply chains when it comes to energy and crude oil more generally, including that of gas. So it's very much about duration here. We're hopeful that things can be resolved over the next few weeks, and we do start to see that energy flows start to pick up again. And in that context, we're going into this situation with very strong earnings growth globally. So we're seeing, particularly in the US market is holding up relatively well compared to some of the other markets, but earnings growth coming into this was strong. It now comes down to duration of the crisis.
Wayne, I'd be remiss not to ask you about gold. What do you do with it? Do you buy?
Look, we're buyers of the gold dip. So any gold price under $5,000 an ounce, I'm a buyer of gold. I also like gold equities in that context. Gold miners in particular have come under material pressure with the current slowdown in the ascension of the gold price. But the reaction of gold is not without precedent. Almost every Middle Eastern crisis we have seen in history, gold has spiked in the first few days. Then it has come under pressure as people begin to work through expectations of potential rate hikes due to higher inflation, as well as the impact that it has on the US dollar, which tends to be a safe haven in these sort of events, and the dollar tends to be stronger. These things have a negative impact on the gold price. However, gold does start to recover once central banks begin to react to the impact on global growth and the impact on domestic economies. And we think that is the case this time as well.
Wayne, thank you so much for that. Wayne Gordon, UBS Global Wealth Management. We'll try to be in the same space next time. Still to come, Philippine Stock Exchange President and CEO Ramon Monzon will be joining us for his take on the outlook, as well as market volatility and what's in the IPO pipeline. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Invest Philippine Summit here in Manila. Now, Philippine stocks are among those in the region rebounding today, but in recent years, they've lagged global and regional peers, and analysts say more aggressive action is needed to turn things around. Avril Hong is back with more. Avril.
Yeah, Has, as you rightly pointed out, when it comes to the Philippine stock benchmark, it is among the emerging markets that are lagging the MSCI EM index. And this also was a situation where we saw last year it was among the worst performers in the Asia Pacific, and investors have been citing those nearer term risks, but also structural issues. These challenges, including the lack of diversity in the market. You look in the neighborhood, some of the other markets, including Malaysia, Thailand, they're seen as having more balanced compositions compared to the Philippines, which, as you know, is more concentrated with financials, industrial. So that is a concern. And then you add to that as well, perhaps not helping investor confidence, the government scandal, as we saw it kind of being affected last year, hitting investor sentiment. Let's take a look as well at the IPO space, because to some, the lack of listings is potentially going to be compounded by the war in Iran. We had the likes of Bloomberg Intelligence pushing out a note last week, and they cited how some of these potential listings for the Philippines this year, including that of Globe's fintech unit GCash, that could see a delay because the top-line growth narrative that's underpinning some of these IPOs, that could be eroded with the war, and even regulatory pivots such as the lower public float requirement might not be enough to offset things. I suppose you put things together, on the flip side of this is among ASEAN, the Philippines valuations a lot cheaper than some of these other markets as well, Has?
Avril Hong, thank you. For more on the outlook for the Philippine market, we're joined right now exclusively by Ramon Monzon, President and CEO of the Philippine Stock Exchange. Ramon, good to have you with us. We just heard from Avril talking about the valuations in the Philippines. Pretty cheap, yet investors continue to make an exit. Why is that?
Well, I think it's more confidence. As you say, our P ratio is in the single digit. I think as of December 2025, we're at about 9.74. Everybody's at 14, 15, 16. So there is, some pent-up value that's not being tapped by foreign investors. So I think it's more confidence and perhaps really liquidity. So we really are focusing on, improve liquidity in our market.
So what are you doing to address liquidity, to also bring back confidence in the market?
First, number one, we have to increase the number of product offerings. So we are working very hard to launch the Global Philippine Depository Receipts, which is it's a cooperation between among the ASEAN exchanges, where Singapore stocks or Thailand stocks could be traded here in DR, and the Philippine stocks could be traded in Singapore, Thailand, or Indonesia. So we're working on that. For long, we're probably the only market without a derivative product. So we are working very hard to launch a derivative product. We hope to have one, at least on the index futures, by the first quarter of 2027. In the meantime, the regulator, the PSE, have been working together to try to get more listings in the exchange. Recently, our regulator has come up with a regulation reducing the minimum public float for IPOs from 20% to 15%, and even lower should the market capitalization of the applicant exceed 200 million pesos. So we still have the big GCash IPO on track. We have our first listing, which is a listing by way of introduction of PNB Holdings. I've been talking to some of the investment bankers here. Apparently, there are many companies, in the wings to raise capital, at the exchange for existing listed companies already.
So, in terms of pipeline, what's the number like for 2026?
Okay. At the beginning of the year, we had forecast a capital raising target of about 170 billion. I think this is still on track. I mean, we are still, focusing on having at least 4 IPOs, 2 big ones, and I guess I'm being overly optimistic, but I think we might exceed that because our regulator has also relaxed the regulations on REIT listings, where now data centers, toll roads, and even tower companies can do a REIT listing. And I understand there's one big, data center company that's preparing for listing. So that was not in our pipeline, but, that's some good news for us.
In terms of the mega listings, how many might there be for the year?
Of course, everybody's looking at GCash for the mega listing. We think there's going to be a big, not an IPO, a follow-on offering perhaps for a mining company, a big follow-on offering for, not a follow-on, it's going to be a follow-on because Meralco has bought a listed company, and I think they will be doing a re-IPO or a follow-on offering for their biggest solar project in the whole Asia.
But some companies are looking to IPO elsewhere, in the US, for instance. PLDT's Maya is one of them. I mean, this is an IPO worth about $500 million, the estimate. And also Jollibee's international unit looking to IPO in the US as well. Why do you think they're choosing to do it overseas?
Okay. First and foremost, let's talk about Maya. Maya is much smaller than GCash, at least in terms of income, net income. And even GCash had seriously considered listing, abroad instead of the Philippines. But after studying it, they realized, they might have a good IPO listing, but after that they become orphans. So why are companies looking into listing in the US like Maya or even Gcash at that time. I think it's the push of the private equity investors who want to exit and want to get hopefully a bigger, amount for their shares. Where on the other hand, Jollibee, I understand that they plan to list or spin off their international restaurant chain, which makes, I think, good sense because it's a high growth. It's not yet making money, it's dragging down the earnings of the mature Philippine companies, which is affecting their price here. So I think spinning off their international operations and listing abroad makes good sense for them.
Given the measures that you're implementing to build liquidity, to build confidence, I mean, in terms of the IPO market, realistically, where might you be in 2027, 2028? Are there targets that you've set for the exchange?
Yes. Well, at the exchange, we don't look so much at the IPOs, but more on the capital raise. We take the, our mission of being a platform for capital raising very seriously. IPOs, like I said, we have a few mega IPOs that we think are in the pipeline, but going to 27, 28, we're really pushing on more SMEs listing. Okay, get more people to more companies to raise capital in the market and give more product offerings or company offerings to retail investors.
In terms of offerings, you've also launched short selling back in 2023, but there's hardly been any short selling activity.
It has been a long, arduous journey. We're dealing with two regulators, basically the SEC and our tax authorities, and we have been engaging them for the last 3 years. I think we're almost at the home stretch. We've gotten all the GIPSLA, the Global Master Securities Lending Agreement, approved by the BIR. We've gotten approval for direct pool lending so that foreign borrowers and foreign lenders don't have to register here but can do an appointment of a local participant, in this case PDTC, the depository. The only thing we're waiting for at this point in time is we are starting to populate the lending pool. So we're talking to insurance companies, we're talking to the pension funds. So we need to get more lenders to populate the pool of lending.
So activity can pick up in the next 12, 24 months? What kind of activity are you anticipating?
Before the year ends, our short selling will be
before the year ends?
Yes.
And I'm also wondering the impact on the Iran war. Is that impacting sentiment in the Philippine market? Because we've seen an exit of foreign funds on the back of that. Is the Philippines getting sold along with the other emerging markets?
Yes, I would say, our market is doing very well. For the first 2 months, we were up about 9.2%. Our index last February 27, the day before the Iran attack, was at 6,611. Just 90 points away, or 1.6% away from the market being in bull territory, meaning a 20% increase from the low last November. But of course, again, the Iran war happened. For the first 2 months, well, our net foreign selling in our market was about 51.2 billion pesos in 2025. In the first 2 months of the year, this turned around into a net foreign buying of 26 billion. Our volumes were up, so we're on track to a recovery path. And then, of course, the Iran thing happens. Since then, from the net foreign buying of about 25.3 billion, we still have a net foreign buying of about 18.5 billion.
When do you see foreign money coming back?
Well, it will all depend on what's happening in the region. I mean, I think a lot of people are on a wait and see. But I think again, if there is some imminent resolution or ceasefire or something of the conflict, I think foreign investors will start coming back into the market.
So hopefully by the end of the year.
Yes.
Ramon, thank you so much for that. Ramon Monzon, President and CEO of the Philippine Stock Exchange. Still ahead on Inside, we'll check on how the Iran war is impacting the Philippines' largest conglomerate by market cap. SM Investments' Teresita Sy-Coson will be joining us exclusively with her outlook on retail, banking, and of course the commercial property sector. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg.
Thank you, Haslinda.
And that's really encouraging. In the recent years, has gone into renewables.
I think all of us in the banks are encouraging renewable energy. One thing I wanted to take up from where from our conversation earlier, you talk about refinery. I know it's a very big project, so.
Welcome back. You're watching Insight, coming to you live from the Invest Philippines Summit here in Manila. Now, President Trump has again called for help from other nations to secure the Strait of Hormuz as the war disrupts global shipping and oil markets. Meanwhile, Iran has stepped up attacks on energy infrastructure, setting a massive gas field ablaze in the UAE. Bloomberg Horizon's Middle East and Africa anchor Jumana Basachi joins us from Dubai. Jumana, take us through the latest developments.
Well, I think you have to look at just what's happened in the last 24 hours in terms of Iran's specific targets now. And it's quite clear that as it pertains to the UAE, they are going after strategic energy hubs and logistic hubs as well. Just overnight, we got word that the UAE airspace has been temporarily halted. It's been closed. This, of course, after another incident at Dubai International Airport yesterday, which led to the suspension of flights. In addition to that, they have now targeted the Shah gas field in the UAE as well. This is a notable gas field. It's responsible for the production of about 20% of UAE's total gas, about 5%, I should say, of the world's supply of that type of gas as well, sulfur gas. And it's also quite notable because it is a gas field that the Energy Secretary, Chris Wright, visited back in 2025 when he was in the region. So they've hit a gas field. They've also had another attempted hit at Fujairah. That is the port that we've been covering and talking about over the course of the last few days, key strategic port on the Gulf of Oman, in addition to a strike on Ruwais refinery a week ago as well. So they continue to target these energy infrastructure hubs. And at this point, Haslinda, it's fair to say that this is, the energy shock that we're seeing in the region is not only about securing the safe passage of these ships through the Strait of Hormuz, but also they're targeting now the actual source of energy supply, which means that they've taken it to a whole other level of escalation.
And of course, Jumana, we heard from President Trump himself asking for help to monitor the Strait of Hormuz, allies not coming forward at all.
No, indeed not, Haslinda. It's pretty notable that the Europeans were pretty quick to put down the notion of participating. The likes of France, Germany, Spain, Greece, all saying that they are not going to take on this offer. The UK standing pat for now. But I think the key one, obviously, is that some of those Asian buyers of Iranian oil. We haven't necessarily heard official comments yet from China. But what we do know is that obviously on back of the latest developments, President Trump has, alongside China, postponed that summit that was supposed to take place in a couple of weeks' time. Could potentially be on back of some disagreements regarding the logistics. Unclear at this point, but it is very unlikely, per, say, Japan, Ministry of Defense, said that they too would sign up to this. They say that the threshold would be extremely high because the calculus from their part is, even though this oil is important to them, why would they run the risk of putting their own vessels in a security danger at risk of being attacked? And so for the foreseeable future, even though Trump is pushing hard and demanding that his allies come to the help in terms of securing the safe passage of vessels, we don't have firm confirmation that any one of those countries is looking to sign up to his plan.
Jumana, thank you. Horizon's Middle East and Africa anchor Jumana Pasachi taking us up to speed on the situation in the war in the Middle East. Let's get perspective from Emmanuel Rubio, CEO and President at Meralco PowerGen Corp. It is the power generating investment unit of Manila Electric Company. Thank you for joining us.
Thank you.
First of all, your take on how tight the power situation is in the Philippines.
In terms of supply, I don't think there's any issue with supply. But of course, with the war in Iran, the impact will be on imported fuels, LNG, coal. We've seen LNG prices running away since the war started. We're buying on JKM index. Before the war, it was around 10. In the last 2 weeks, it has peaked at around 28. And it has gone down, but I don't think it is at a level where it's still, we can call it stable. It's around 16, 17, but that will have a ripple effect on power rates for sure. As of course.
What kind of ripple effects? What power rates are we looking at potentially?
The rates will have to if we are just going to proportionately factor in the cost with 10 at the start and now at around 16, it could probably be it could almost double if we don't manage it, right? So the thing is what we're doing is that we're looking at our portfolio and trying to replace as much as we can power that's coming from LNG powered plants, right? And it is really timely that in last weekend we're building this huge photovoltaic cell project, Terra Solar, where we're putting 3,500 megawatts of solar facilities coupled with huge battery capacity, which is around 4,700 megawatts. And this is going to supply a block of power without any variability from 8 in the morning to 9 in the evening. First of its kind in the Philippines and probably even in the world. So this is shielding, is supposed to shield Philippines from energy spikes. No? We're still commissioning and we're not there yet. We're at full capacity, but we're already having an impact on the cost of electricity.
When it comes to energy prices, we have heard the Energy Secretary tell us that you can expect 16% increase in April. What are your own thoughts on whether we'll see further increases from there?
Well, the view on the LNG supply volatility, based on a number of reports, it will probably last for 2 more months, right? Maybe around May. But as I said, the indices has gone down. Hopefully, it stays there where it's a bit manageable. But the one thing that we can really do is look at the portfolio and generate where we can actually get power at a lower cost. Maybe coal has to supplement LNG. And then this solar projects that we have, not just ours, but all over the projects that are being pushed by DOE as they go on stream, that will bump off expensive power.
You talk about Terra Solar.
Terra Solar and all the projects that are actually being injected into the grid today.
What's your own, strategy for renewable energy? Take us through, the thoughts on the next several years.
Yeah. Well, in MGen, in Meralco PowerGen, we did a double materiality assessment. Where can we actually grow with both sustainability and economic progress in mind? And it still leads to building more reliable renewable energy. But to say that it's a reliable renewable energy, it has to be coupled with energy storage, any form of energy storage, so that we can manage the variability. So that's where we're headed. We hope that we can actually replicate Terra Solar after we deliver fully the capacity that we are committed to deliver. And we're looking at Terra Solar 2. We believe it's scalable and repeatable. And once we can actually do more of these, then we can say that there will be some level of self-reliance as far as energy is concerned.
But in terms of power mix for the Philippines, how should it look like?
Well, the goal of DOE is to have 50% of our energy portfolio to be renewable energy by 2040. It is, of course, with attendant challenges and issues like managing variability. And that's why I think what we've done in Teresita is to prove that we can manage variability within our own facility by having huge amounts of energy storage backing up the solar production.
Do you think the Iran war would accelerate the transition to renewables? Because right now we know that the president has come out to say the buffer is only 2 to 3 months. Beyond that, it is a big question mark.
The driver before was climate change and energy transition. It's a must. Now I think it just made the argument much more compelling that we need to accelerate investments in cleaner and more affordable energy sources.
What's your take on the concerns expressed by businesses in the country saying that there is a real possibility of a power shortage, that the pumps could go dry by May? Is that
as far as
that could be a reality?
Pumps or fuel for transport is concerned, I'm not that updated. But for power, we have secured supply, at least on all our coal facilities, and we have a 60-day inventory for our LNG to power facility, and we will continue to look for. There are sources. It's just a matter of how much would that LNG be.
For the longer-term plan, what's the plan for your growth strategy?
We would like to grow with using low carbon energy, right? LNG, before this incident was the transition source for energy, and we are still looking at growing. I think this is a black swan, and will pass, right? But the real solution is really to provide renewable energy that can actually go well beyond the usual renewable energy hours. And in this case, if we can push delivery of energy coming from a renewable source, maybe even up to 14 to 16 hours in a day, I think that would be a real game changer.
But where will your investments be going into in the next 3 to 4 years? What's the game plan
in the next 3 to 4 years would be in both in renewable energy and LNG, is small scale. But I think in the long term, Philippines and we as Meralco, we are actually leading in the policy discussions as regards investment in nuclear energy. I think Philippines will have its nuclear energy source maybe in late 2030s to 2040s, but it will be there. I think it's the only source of non-carbon sustainable and secured energy supply, and I think that will be a reality in the mid to long term.
Emmanuel, as we take a look at the Iran war, the greatest impact has been on oil prices. As someone within the industry, where do you think oil prices are headed? As some say, 90 will be the new normal.
We've seen prices spike during the Ukraine-Russia war, right? And as I said, I hope that this black swan is just an event and a blip, right? I think it will settle down eventually. We get the right policy. We get governments to talk and negotiate. I think at the end of the day, the betterment of the world will still be at the agenda, at the front of the agenda.
Of course, the concern has been the weakening peso as well. What's your take on a weaker currency?
It is again the effect of the war. I hope when things are back to normal,
is there a need for the BSP to provide further support for a stronger currency?
Well, it's up for the BSP to make that decision, but I think we are prepared to a certain extent. We've hedged some of our projects up to a certain level, and I think we're still not really deeply impacted by that. But if this stays at the current level for a prolonged period, then I think there will be some concerns.
How about the impact on the economy? Do you see GDP getting impacted?
Well, with the move of the government to reduce the number of days in the government to our workplace, demand for electricity will go down. Demand for fuel will go down. I think we will see some sort of slowdown. How extensive that will be, I don't have any numbers for you now.
What's the biggest concern for you? What's keeping you up at night as we await for, the end of this Iran war?
That's what's keeping me awake at night. Where are we going to see the end of this incident?
But what are the biggest worries for you? Where are the spillover effects that trickle down?
Fuel security. As I said, we can still buy, but at a certain rate. What if it runs out, right? And we can't supply anymore. But I think
At what rate would it be impacting you in a bigger way?
In terms of
the prices.
Well, we are already impacted, and we're already finding ways to
Can
reduce
you quantify the impact?
Well, we bought at the last time, the highest that we bought it at, I think from a $10 JKM, we secured orders at around 18, right? So there's an increase, but we're trying to supplement that again with this with our new capacity coming from renewable energy, and in discussions with DOE to make sure that to maximize the use and dispatch of coal plants, whether that can be through a regulation or a market intervention or something that we are actually now working with DOE with.
Emmanuel, thank you so much for your time today. Emmanuel Rubio, CEO and President at Meralco PowerGen Corp there. Still to come on the show, SM Investments Vice Chair Teresita Sy-Coson will be joining us exclusively with her outlook on retail banking and commercial property. Plenty more ahead. This is Bloomberg. Thank you, sir.
As Tessie points out, a slower growth scenario because people will be unnerved. They'll be nervous and they will be cautious in how they spend. If that clears itself up, there'll be more comfort in beginning to stretch themselves out and move back to expenditures that then drive all our different businesses. It's a very natural human reaction. I think what's important is to ride out difficult times safely, and we will have a chance to rebuild again. But this is a time for us to just understand what exactly is happening and also to see how this
Welcome back. You're watching Insight, coming to you live from the Invest Philippines Summit here in Manila. Philippine Finance Secretary Frederick says the government may consider adjustments to its GDP growth target if oil prices remain at elevated levels. He told us exclusively that a short-term Iran war could impact GDP by less than 10 basis points.
I think the BSP has a policy of neither supporting, of not directly supporting the currency. What they have is a policy to intervene in the markets when the movements are too abrupt or too sharp. But if the movements are gradual, they have a policy of not intervening.
So have the movements been abrupt or gradual? What's your take on that?
I think in the last few days, it's probably been more abrupt because of the external shock of the Iran war.
At what Philippine peso level would you be most concerned about? Especially given that oil prices are priced in dollar.
I think, again, I'd like to be consistent with the policy of the Bangko Sentral, which is as long as the movements are smooth and not abrupt, it should be okay. I think what we're really concerned about are abrupt and very sharp movements.
Some in the market suggest that the peso could breach 60 as soon as today. If it does breach 60, is that an abrupt movement? Would that prompt a pivot in the BSP?
I think the definition of abrupt is not a number. It's not 59 or is it 60. It is how quickly that rise will be.
So, as it stands right now, from a finance secretary perspective, you're not too concerned about the weakness in the currency?
I'm not too concerned, yes.
What would cause you to worry?
You know, the weakness in the currency also has its benefits. It also supports our export sectors. For example, our largest export are the export of, for example, semiconductors and electronics industry. That's $115 billion. That grew by 9% last year. Our second largest export industry is the BPO industry. That's $40 billion. That grew 5.3% last year. And our third strongest dollar remitter would be the remittances from overseas Filipinos. That's about $36 billion. That grew 3.3% last year. And on top of that, we have two other legs that we are hoping to build. That would be tourism and the mining sector. So we have other beneficiaries as well.
Is your growth projection intact? You've talked about a potential recovery in the first quarter. Is that going to happen?
Well, obviously this external shock, this oil shock will affect the GDP growth. As you know, the most important variable in all of this is the price of oil and the duration of this elevated price. If it is short term, meaning if it were end to end tomorrow, perhaps the effect on GDP would be less than 10 basis points, maybe just 0.1%. But if it persists, say, for 6 months, then it will have a more pronounced effect on our GDP growth.
Secretary Go, just help me understand, at what oil price would you have to revise your growth projection?
Over 80 will already have an effect. Over 80 and over a month, you already have to adjust slightly. So right now, where it's close to 100 for Dubai crude, and persisting for 16 days, it will have an effect already.
Where are you in terms of your projection for inflation? The people are feeling the pinch because there is immediate direct implications on food, on energy prices, and hence you've gone, to a 4-day work week. Where are you on your thoughts on inflation?
Well, I think that's a reality already. We have put our band on inflation at 2 to 4%. We finished February, the first 2 months of the year, at 2.4%. So we have some headroom to still remain within our band. But of course, definitely we're going to see inflation numbers creep up as long as the war persists.
So do you think that the BSP would be in a very difficult position managing inflation and growth at the same time?
I think the BSP's main mandate is to manage inflation. I think that's like the top mandate. So
it has been helping growth at the same time too.
Yes. In the easing, when we started the easing cycle, but we also signaled in the last policy meeting that we are nearing the end or very near the end of the easing cycle. So we did communicate that.
In terms of alternative energy and also energy security, how do you ensure that there isn't an energy crisis in the country? Because right now businesses are concerned that perhaps you'll run out of fuel by May.
Yeah. That's a very valid concern, which is why last Sunday, I, together with the Secretary of Energy, met with the 16 oil companies in the Philippines. We were able to address most of their issues. We also asked them to help us source the 2 million barrels of oil that the government will step in to add to our buffer stock. They also had another ask, a very interesting ask that I thought was a novel suggestion from them. They were looking at relaxing some of our product standards. Apparently, if we relax our product standards, we will achieve two things. We will be able to source cheaper fuel. And secondly, we will now have more sources of fuel because the higher product standards we have for fuels in the Philippines limit the number of countries we can buy oil from. For example, most of our oil we buy from Korea because Korea can meet those product standards. So we buy from Korea, Japan, Singapore, and China. By relaxing those product standards in this emergency situation, we can now suddenly open our sources of fuels to probably 3 times that or 4 times that. Much more countries can sell us the other product standard fuel.
And that was Philippine Finance Secretary Frederick Go speaking exclusively to us earlier. Up next, SM Investments Vice Chair Teresita Sy-Coson will be joining us exclusively with her outlook on retail, banking, and the commercial property sector. Plenty more ahead. Keep it here with us. This is Bloomberg.
Not just as a beneficiary of these reforms, but as a co-leader. Yours is a country that can influence the flow of development finance, shape standards.
Welcome back. You're watching Insight, coming to you live from the Invest Philippines Summit here in Manila. President Trump has requested a delay to his upcoming summit with Chinese leader Xi Jinping, about a month. Bloomberg Intelligence says the move may slow the yuan's rise. Let's get more on that with Chief Asia FX and Rates Strategist Stephen Chu, who wrote that report. Stephen, what now for the yuan?
To be very honest, we know that China has been pushing back against yuan gains through the fixing, through the FX RRR tools. So now, even this news saying that there might be a delay between President Trump and President Xi, if market perceive it as a bad news, from a market sentiment perspective, if it pressures the yuan, it's even better for China because they want to slow the yuan gain. The yuan has been one of the safe havens since the war broke out on 28th of February. It's just basically behind the Hong Kong dollar as a safe haven. So it works if it cool down a little bit, if it slows a little bit. So to be honest, this news doesn't really bother yuan bulls. It's just a matter of time for it to rise again. But for now, any uncertainties could be minorly negative for the currency.
And of course, PBOC has been pretty careful about those rapid gains in the yuan. Here in the Philippines, we had the BSP intervening to prop up the currency. What's the outlook? It's just a matter of time that it will breach 60, right?
Yeah, if you ask me, even before the war, we saw that the underperformers in Asia are the ones with fiscal and political uncertainties. Not just Philippines, when we look at India, when we look at Indonesia, they have been under pressure. And now with this war, we look at net oil importers, and that also put Philippines on the list. So it's really, there are a lot of multiple headwinds for the currency. So it's really a matter of time for it to test 60 again. And central bank will have to guard that.
Stephen, thank you. BI Chief Asia FX and Rates Strategist Stephen Chu in Hong Kong. Let's get perspective from Teresita Sy-Coson, Vice Chairperson at SM Investment Corp. It's the Philippines' largest conglomerate by market cap, with a presence across retail, banking, and property. Tessie, always good to have you with us.
Thank you.
We've just been talking about the weakness in the Philippine peso. What's your take on the weakness we're seeing right now?
Yeah, with the weakness, I think the prices will be higher on top of the oil crisis. And maybe the foreign investors will not look so kindly upon us because of the peso exchange.
But it's not a reflection of the fundamentals in the country?
No, the country is quite, everything is still as is, except maybe prices are higher. The business is still doing okay. Consumer market is strong. It's still strong. And there's still expansions in the capital market, and I think the fundamentals are still there. Now, except that maybe our prices will be higher, we'll have higher OPEX, then we'll have lower margin. But I think it's about time that we also rethink about efficiency.
Are businesses looking for the BSP to intervene, prop up the currency, because it adds to input costs for businesses, right? Imports become more expensive.
Yes.
That hurts businesses and margins.
Yes, because we import a lot of our goods and also raw materials. So if they intervene in the FX market, that will be good for us.
So would you like to see a more aggressive approach? We saw how the BSP propped up the currency when it was close to 60, but should it do more?
If it can, we would appreciate that.
Should the BSP raise rates?
I think there's no choice. We have to raise rates because of what is happening now. And I guess in the past we went a little bit too low. So it's a natural consequence that we will just have to go up higher. But as to how much, I think they know their job. But we expect the interest to go a bit higher.
Might rates be increased at the next meeting in April?
Probably. I don't want to influence them, but probably.
It makes sense for the BSP to raise rates at the next meeting.
It does make sense also for the FX.
Tessie, let's take a look at the impact of the Iran war and high oil prices on your businesses. Which ones have been vulnerable?
We have most of them will be vulnerable in the sense that our OPEX will be high because it's not only on the oil, the byproducts of the oils are all, will all be rising. So generally, everything will be higher.
Can you quantify the impact on your businesses, let's say retail, because consumption obviously is hit by higher prices in the country?
Yes. It will soften a bit, but it will go up again because, they all have to buy. I mean, the consumer market is still there. They have to buy something. So right now, if they are concerned, they buy only the essentials. And when they get used to it, then they go back to buy the discretionary.
What are you seeing particularly? What trends are you looking at right now on the back of the Iran war?
Softening for a while. I hope, it depends upon how long the war will.
How much of a softening are you seeing?
Maybe in terms of growth, perhaps it will be 5%. So then we were hoping to make it up at the end of the year.
And which are the businesses which are more resilient?
I guess we are all in the consumer side. Maybe the banking will be more resilient.
Why so?
Because it doesn't have that much asset except it doesn't really store assets.
But given what's happening in the world today and the impact on investor sentiment as well as consumers, might you see non-performing loans actually rise on the back of that?
We have gone through that in the past, and it's not significant. So I'm not concerned about that.
Is this a good time for SM Investments to be looking at expansion? Or are you putting things on hold?
No. We continue with our expansion. That's why the capital investments are still going on. It's business as usual, except that we have to watch our OPEX. We have to. We have to watch. Our margins will be affected. But in a way, it make like in the COVID time, we'll have to be more efficient.
But with costs getting higher, should you be holding back? I mean, for the businesses like logistics, shipping costs are higher. Are you not seeing higher shipping costs?
Yes, I see that. And as a matter of fact, I spoke to them yesterday about it, but they know how to manage it. So I'm confident that we'll be okay.
Now, what are you seeing in terms of shipping costs? How much higher are they? At what stage might you be concerned about?
It could be upwards of 20%.
That's currently?
Yeah. No, because of this conflict. But people still have to ship. People, there's this transport still has to be there.
But what kind of alternative are you relying on? I mean, in terms of shipping, where are your products getting shipped from to headed?
Well, they will look into the efficiency in the system, but I hope that they don't stop shipping. Transporting goods.
What's the biggest concern for you right now? I mean, you seem to be quite optimistic that things will bounce back.
I am optimistic because I view this as a temporary setback, and I hope that's temporary. And the Philippines have gone through a lot of this, and I hope that this is just one of them, maybe a bit major, but one of them.
But growth will
be affected. Perhaps we may not be able to grow as much because of the external factor, but it will be good if we still grow. I think we would still grow.
The Philippines is often seen, or rather SM Investments is seen as a proxy to the economy. What are the biggest concerns that you have in the economy?
It's the softening of the consumer demands, but everything seems to be doing okay. So there will be expansions of market, there will be urbanization. So I guess it will make up for the reductions in the demand.
But can business be as usual when some, across industries are talking about possibly fuel shortages and consumption getting hit?
Yeah, business will not be as usual in the sense that you have to balance a lot of things. You have to replace a lot of things. So it's not business as usual in that aspect. But in terms of growth, we still have to grow.
What are you balancing?
The supply, the volume of the supply, the prices of the supply, the market demands. You will have to balance it. So in a way, our margins may be affected.
In terms of input costs, where are you seeing the biggest cost increases?
We are an import country, and I guess most of them will have to increase.
But for the business?
Yes. I mean, for us, we import a lot of things too. So, except for the bank, which doesn't import, it's not an asset company. But for all the others, we do import.
How is the property sector doing, Tessie?
Property is okay. It's not as strong, but I can see something going up, and so, which means that in spite of all of this factor, they're still buying.
When you say that the impact has not been so much, can you quantify that? Can you give a number?
No, we have. There was a softening last year, and I guess this year we see some increases in the sales, and so which means the consumer, the home buyer's consumer, is not really that. I mean, it's affected, but not as much.
10% increase in sales, 20% increase in sales.
10% increase in sales would already be good for us.
Is that what you're seeing?
Yeah. So then we control the OPEX.
Might you see a greater increase once the Iran war is over and sentiment returns?
Yes, I think so. I think the demand is always there.
There's been a lot of talk about the disruption that AI will bring. Is that impacting, demand for office spaces?
Yes, for office spaces, yes. But we need AI for productivity, for the customer front, and for the back room. So, in a way, maybe one industries may be affected, but the other industries can be more productive.
So, in terms of office space, what are you seeing? What are you targeting? What's the estimates that you have for the next 12, 24 months?
We are still watching it. So we thought that if there are more businesses, somehow they will need some offices. I think most of the business, or even on the retail or office area, they do need something which is structured rather than all digital, because the trust is also on something. The consumer also want to see something that is structured.
Which businesses and which sectors would require those spaces, you think? I mean, we talk about how tech companies are expanding and they're occupying these spaces. What are you seeing?
If there are more businesses that are coming in, obviously they do need a place where they can meet their customer. So maybe they will not get as much as the BPO. But the BPO will reduce, but I guess they still need some physical space. So I think that it's a change of business model. So in that way, then we'll just go to other building structure, other purpose.
BPO intact or not intact?
BPO intact will still be there, but maybe on a reduced volume. But this one is coming in slowly, so right now we're still okay. And so it's a slow trend anyway. So we're just watching it.
You talked about how AI can be tapped to increase productivity.
Oh, yeah.
How are you deploying AI within your companies, within your businesses?
Yeah, we're still learning, but right now we're just doing on the customer front, and some of them on the back room productivity. So we're not really reducing people, and the expense is also high in terms of technology. But, we are seeing more productivity.
You're not reducing people right now. Do you see AI eventually, prompting you to reduce people?
No, it's just that a change of work. Change of work.
In what sense?
And a lot of them will be more on customer front, which means you really have to go out and meet your customer.
But as you hire for an AI future, are you looking for different attributes from potential employees?
Oh yeah. They will have to learn some of the how to go about in the technologies that we are employing. There's a training anyway, and we go into it slowly, so there's not much big disruptions in terms of employment. Our people will be redeployed to more on the customer front, because for us we believe that customers should not only be on the digital, they should also be able to reach them on the physical structure.
How are your employees getting trained on AI?
just a typical training wherever where they need to have to upskill those group of people.
Are you investing heavily in AI for the companies?
Not really, but we are there. I cannot say heavily, but we are getting there.
Why not, Tessie? They say AI is the future.
No, we still believe that things have to go on slowly, according to the customer requirement, and not many customers do like to deal with AI purely. So we're still very, very face-to-face oriented. We give the personal touch.
Tessie, thank you so much for your time today. Teresita Sy-Coson, Vice Chairperson at SM Investments Corp. Plenty more ahead. Keep it here with us. This is Bloomberg. Just look at me. Welcome back. You're watching Insight, coming to you live from the Invest Philippines Summit here in Manila. Our next guest serves as the Commissioner of the Social Security System. It is the state-run social insurance program in the Philippines that manages the retirement savings of workers in the private sector and currently has around 43 million members. Let's bring in Victor Limlingan Jr. Victor, good to have you with us. First of all, your take on this Iran war and how it is impacting investor sentiment.
Well, it's definitely had very material negative sentiment. You can just look at the Philippine Stock Exchange. We dipped below the 6,000 level briefly. Oil, gasoline prices on the street are rising. I understand it will breach the 100 peso level maybe in a few days. So it's certainly, a lot's changed now. It'll be a new reality for us to invest in.
Still a lot of uncertainties. Is it enough for you to perhaps rethink your investment plans on the back of stresses in the Middle East?
Well, we certainly monitor what's going on very carefully. But we're a state pension fund. So we're investing, the median age of the Filipino workforce is about 27, 28. And we're investing for the retirement at the age of 65. And of course, there are more workers coming in. So we have a very long-term horizon. So I can't say I anticipated this specific crisis, but when we invest, we assume there'll be crises of this magnitude, not just one, but multiple crises over the next 40 years. So when we take that into consideration in our investment philosophy.
When you think about a 40-year horizon, you can take quite a bit of risk. I mean, you can buy the dip.
Yes.
What opportunities do you see?
Actually, maybe to put things in perspective, right now our assets are roughly 1.2 trillion. It took us 50 years to reach this point. We think we'll take in another 1 trillion pesos in the next 4 years. So, think about that. 1.2 trillion, it took us more than 50 years. But in the next 4 years, reflecting our good demographics, we're taking in another trillion. So those funds could be invested. So bond yields have gone up. We can invest at those higher rates. And equity prices have gone down. And we can buy, great Filipino companies at much better prices than what we could have a month ago.
The question is, what have you been buying? Any specifics that you can share?
Well, SSS is just so large that we're part of every major maybe fixed income offering, provided it meets our criteria. We're there, and we tend to invest up to our 20% of most offerings in the Philippines we've participated in, as long as they meet our criteria, both fixed income and equity. So the SSS is just so large that in every major investment opportunity in the Philippines, we are there.
But in terms of assets that can boost your income, how are you looking at that?
Okay. Well, let me give you an idea of our portfolio now and how we'd like it to be. So right now, we're roughly 50% in fixed income. 50% in government securities. Then the balance, it's about 1/3 equities, 1/3 are in loans, and 1/3 is in real estate. So I think given the long-term duration of our liabilities, we can afford to invest in assets which maybe have a little more volatility, but will give better returns over a longer period.
Such as?
Well, number one, we'd like to increase our exposure in real estate. Of course, the price has to be right, it has to be studied, but real estate can be improved. Also, we're lending more. We've launched a microloan program. So basically, many Filipinos have to go to informal lenders to borrow, and they at very high rates. I mean, we're happy with, not really happy, but we've taken on GS rates. So for maybe a slight premium of 2 to 3%, we can lend to our members, and we've partnered with fintechs to distribute that. We'd like to invest in infrastructure. These projects, of course, have a long-term duration. This year, we'll hopefully invest a very, very small portion of our assets offshore for the first time. So maybe it'll be less than 1%, but at least we've taken that step. So again,
where offshore are you looking at?
We haven't decided on that yet, since this is new to us.
Somewhere in the U.S.?
Possibly. I don't want to tie ourselves in. We'd want, us. I mean, I guess we want superior diversity. We want to optimize our risk now. So if we get better return and it reduces portfolio risk over, that would be attractive to us. So we're still studying different markets. But having said that, since this is our first foray, it will be more conventional.
How about in terms of acquisitions? What are you looking at? Or might that be on hold?
We don't acquire companies. We're a passive investor. We're the state pension fund. Our mandate is to invest the funds of our members prudently for their retirement. So we don't operate any businesses.
Very quickly, for a long-term investor looking 40 years, what's the biggest risk for you right now?
Well, the biggest risk really is demographics. If the way I look at it, I never thought I'd see it in my lifetime, but the Philippine fertility rate has fallen below 2.1. So our long-term models assume 1.8. For those of us who grew up with 4 kids in the family, that's mind-boggling. But eventually, because pensions right now to a larger extent have been funded by succeeding generations because they've been bigger. So it's something you can do. But if generations fall a little, not as dramatic as maybe in other countries, but naturally the focus will be on better investments.
We have to live with that. Victor, thank you. Victor Limlingan Jr., Commissioner of the Social Security System. Now, before we go, here's a look at our show tomorrow with Brent crude above $100 a barrel. Supply fears. Moneta's Ivan Devitt will be joining us to break down what the turbulence means for investors. That is it for Insight here at the Invest